Social Security is one of the most important sources of retirement income in America. It's also one of the most misunderstood. Ask 10 people how it works, and you'll probably get 10 different answers. Some think it's a personal savings account. Others believe the government simply sends everyone a check once they reach retirement age, and some worry they'll never receive a benefit at all. The truth is somewhere in the middle. Once you understand the basics, Social Security becomes much less confusing, and you'll be in a better position to make smarter retirement decisions. Let's start with the biggest question. Where does the money come from? Every time you received a paycheck during your working years, you probably noticed money being deducted for Social Security taxes. If you're an employee, both you and your employer contribute through payroll taxes. If you're self-employed, you generally pay both portions yourself. Those taxes help fund benefits for people who are currently receiving Social Security. In other words, today's workers help support today's retirees, while tomorrow's workers will help support future retirees. That's why Social Security isn't a personal investment account with your name on it. It's a social insurance program designed to provide income for retired workers, people with qualifying disabilities, and certain family members, including some surviving spouses and children. So how does the government decide how much you'll receive? This is another area where people get confused. Many assume they'll simply get back everything they paid into the system. That's not how it works. Your retirement benefit is calculated using a formula based primarily on your lifetime earnings history and the age at which you claim your benefits. Generally speaking, the more you earned over your career and the longer you worked, the higher your monthly benefit is likely to be. But your earnings aren't the only thing that matters. When you claim your benefits is just as important, you can generally begin claiming retirement benefits as early as age 62. But there's a trade-off. Claiming early usually means accepting a permanently smaller monthly check. Wait until your full retirement age, and you'll generally receive your full calculated benefit. If you delay beyond your full retirement age, up to age 70, your monthly benefit can continue increasing. That leads to a question people ask all the time. Should everyone wait until age 70? Not necessarily. If you're in excellent health, expect a long retirement, and don't need the income right away, waiting may make sense. But if you've retired early, have health concerns, or simply need the money sooner, claiming earlier may be the better choice. There's no universal best age. The right decision depends on your personal situation. Another common misconception is that Social Security will replace your entire paycheck. For most people, it won't. Social Security was never intended to cover every retirement expense. Instead, it's designed to replace part of your income. That's why many retirees also rely on pensions, IRAs, 401ks, savings, and investment accounts. Think of Social Security as the foundation of your retirement income, not the entire house. Now let's talk about something many married couples overlook. If you're married, your claiming decision may affect more than just your own benefit. Depending on your circumstances, spouses may qualify for benefits based on their own work record, or in some cases, based on their spouse's earnings record if that amount is higher. If one spouse passes away, survivor benefits may also become available, and the surviving spouse may be eligible to receive the higher of the two benefits if they meet the requirements. That's one reason why claiming decisions can have long-term consequences for both people in a marriage. Another surprise for many retirees is taxes. People often assume Social Security benefits are always tax-free. That's not always true. Depending on your total income from sources like pensions, IRA withdrawals, 401k withdrawals, investment income, and part-time work, a portion of your Social Security benefits may become taxable under federal law. That's why your retirement income strategy matters just as much as your investment strategy. Then there's Medicare. Many people enroll in Medicare around age 65. But Medicare and Social Security aren't exactly the same thing. You don't automatically need to claim Social Security just because you're becoming eligible for Medicare. They're separate decisions, although they often become part of the same retirement planning conversation. So, what's the biggest mistake people make? They treat Social Security like it's just another monthly check. In reality, it can be one of the most valuable financial decisions you'll ever make. Claiming too early without understanding the trade-offs, assuming your spouse will receive the same benefit after you're gone, believing benefits are always tax-free, expecting Social Security to cover every retirement expense. These misunderstandings can affect your retirement income for years. The good news is that you don't need to memorize hundreds of complicated rules. You just need to understand the basics. Know how benefits are funded. Know how your earnings affect your benefit. Understand how claiming age changes your monthly payment. Recognize that Social Security is only one piece of your retirement income, and remember that your decision may affect your spouse as well. When you understand those principles, you're already ahead of millions of people approaching retirement, because Social Security isn't about getting the biggest check possible. It's about making the claiming decision that fits your retirement, your finances, and the life you want to live. If you found this video helpful, be sure to subscribe for more simple retirement strategies, Social Security tips, Medicare guides, and practical financial lessons designed to help you retire with greater confidence. Because the more you understand your retirement benefits today, the better prepared you'll be to make decisions that can benefit you for years to come.